Good morning and welcome to the Hansuke Conversations webinar on sort of implementing DAC6 mandatory reporting of cross-border tax arrangements. The webinar will last from 10 till 11, and I would sort of like to ask you all to sort of introduce yourselves on the chat tab at the top right-hand side. And throughout the webinar, please do raise questions on the questions tab, which is right next to it. The speakers will keep their microphones muted when they're not speaking, and that should hopefully improve sound quality for all of us. I'd now like to just say a few words about the topic today. DAC6 is something that we in Hansuke see most organizations working on. It's an important new piece of tax legislation, and it's a great topic on which to end the season 1 of the Hansuke Conversations series of webinars. With that, I'll hand over to Ali Kazemi, who's the managing director of Hansuke, to say a few words of sort of introduction, and to also demystify what DAC6 is all about. Over to you, Ali.
Thank you very much, Henry. My name is Ali Kazmi. I'm Managing Director at Hansuke. And as requested, I will just provide a very high-level summary of what DAC6 is about before we move to our panel discussion. So DAC6 is simply, by far the most technically complex automatic exchange regime that has been introduced to date. It is a new EU directive that strengthens tax transparency on harmful cross-border tax arrangements. The new rules are designed to provide tax authorities with greater visibility on any aggressive tax planning. As you may be aware, in the UK, we have had such a regime running since 2004, but that regime only applied to domestic arrangements. The directive effectively borrows the mechanisms from the UK Disclosure of Tax Avoidance Schemes regime, DOTAS as it's known. The directive, DAC6, is an EU measure. So I'm always asked about its implications from a Brexit perspective. Well, Brexit does not change anything with regards to DAC6. The directive has been transposed into UK legislation, and it is the intention of the UK government to continue with it even after the Brexit transitional period is over. Accordingly, when I refer to member state, it includes the United Kingdom. So as for DAC6, it is a cross-border regime, and its scope is intentionally wide, and it may include arrangements that may not have an apparent tax objective. In that way, it is a mechanical device, and it requires automatic reports to be generated and lodged with the tax authority. I emphasize here that there is nothing wrong with filing a DAC6 report, just as there's nothing wrong with filing, say, a SAR report under the UK Proceeds of Crime legislation. So the directive has been in force since 2018, and it formally went live 4 weeks ago on the 1st of July 2020. There is much discussion about deferrals of the directive. So where a member state has elected to take up the option to defer, all that means in practice is that the actual DAC6 report can be now submitted 6 months later. There's no shift in the periods which are going to be reported upon. Importantly, the starting point for DAC6 arrangements remains intact. It is the 25th of June 2018. So all arrangements from that date onwards are in scope. The directive applies to cross-border arrangements. In this context, cross-border arrangement means an arrangement which involves either two different EU member states or an EU member state and a third country. As such, it excludes purely domestic arrangements where all participants are resident of the same jurisdiction. Where a cross-border arrangement has been identified, the next step is to determine whether, where a cross-border arrangement has been identified, the next step is to determine whether the cross-border arrangement is reportable or not. For a cross-border arrangement to be reportable, it must at least contain one of the 5 hallmarks. The hallmarks are a set of indicators or conditions or fact patterns which, if found to be in operation, are suggestive of potentially aggressive, harmful tax practice. So here's a list of, on your screens, you can see a list of the hallmarks, and they can be quite specific or they can be quite generic. And one of the things we need to do is systematically go through these hallmarks. So once we have gone through and we've identified cross-border arrangements, then identified whether that cross-border arrangement is reportable or not, the third filtration is around whether we have an intermediary or not, because the filing obligation, the duty to file a report under DAC6, intermediaries. And where there is no EU intermediary, the relevant taxpayer could be responsible for filing the DAC6 report. An intermediary is defined quite broadly, and 2 types of intermediaries are envisaged. There's a promoter category and the service provider category. And a promoter is basically any person who designs, markets, organizes, or makes available for implementation or manages the implementation of a reportable cross-border arrangement. The definition of intermediary is further widened to include the service provider category. And this is any person who knows or could reasonably be expected to know that they have provided aid, assistance, or advice with respect to the design, marketing, organization, or making available of a cross-border arrangement. So it's basically someone who facilitates that activity. And many institutions, banking institutions, will probably fall into that category. Importantly, a service provider is not an intermediary and has no reporting obligations if it did not know or could not reasonably be expected to know that they were acting in respect of a reportable cross-border arrangement. So as you can see, there are these filtration process one needs to go through. And once you sort of find that you do have an intermediary and there is a filing obligation, then you need to think about the reporting aspects. The directive requires very detailed information to be reported, including the names of the individuals involved, all the parties, including all the intermediaries, the value of the arrangements, and listing of all the different member states who are touched upon by the arrangement. I'm often asked sort of is this just one further measure, and how, does it have teeth? It absolutely should be taken seriously, and it does have teeth, because non-compliance has both reputational implications and there are stiff penalties. So in the United Kingdom, the regulations basically have codified 1 million fines up to £1 million. So it is serious. I'm not going to say the compliance with it is easy. DAC6 is difficult because it's complex. It is pervasive and it is difficult to implement. So one of the biggest challenges we're going to talk about today is around what they call the back book reviews, the historical reporting on arrangements historically and retrospectively. So with that, Henry, I will pass back to you and you can start the panel discussion.
Thank you so much for that, Ali. I'm Henry Irving. I'm a principal at Hansuki and lead on sort of accounting assurance, risk and resilience. I'm delighted to have such a leading panel sort of experts here to share their experiences with us today. Well, Andrew Creamer is head of compliance and chief sort of anti-money laundering officer at sort of ICICI Bank UK. Ahmed Nawab is also a principal at Hansuke, and of course, well, Ali, you'll be staying on the panel too to provide some of your great insights here. I'd now like to ask well, Andrew and sort of Mehmet to say a few words about themselves, their role and their sort of organisation, just so that people can recognise your voices and get a bit of background as to what you do here. So, starting with Andrew, a few words about yourself, Andrew, and your organisation.
Thank you, Henry, and good morning, everybody. As Henry said, I'm Head of Compliance and MLRO at ICICI Bank. I've been at the bank for just under 18 months now, and prior to joining ICICI Bank, I spent most of the last 15 years working in Grant Thornton's regulatory advisory and consulting practice, undertaking a range of skilled person reviews, also worked for both regulators as well, and also was seconded to the FCA's enforcement division. So done a fair amount of work in the banking sector. As most of you will probably know, ICICI Bank is an Indian-owned bank. It's one of the largest banks in India. So in the UK, we have a very clear strategy of focusing on NRI Indians, so non-resident Indians, whether that be retail clients, business clients or corporate clients, and we're really tapping into those trade flows and that trade corridor between India, the UK and the rest of Europe.
Great, Andrew. Thanks for that. And what about you, then, Emmett, your role and how you bring value to clients here?
Hi, good morning, everyone. Thank you, Henry. Yes, I had the operational taxes division at Hansuke. I've been with Hansuke for about 4 years. I look after I try to assist a lot of fund institutions with their compliance matters, building up the capacity. I've done that for FATCA, CRS, QI, and now heavily involved with DAC6 compliance matters.
Great. Thanks for that. All right, so we'll now go to the panel discussion areas here. By the way, do ask questions throughout this panel session, because that helps with the sort of interactivity of the discussion across the piece. Hopefully we'll be able to deal with all of your questions in the actual panel, but plainly time may limit us here, as we do want to give sort of each area a fair hearing, but we will get back to you by means of email if we haven't got round to sort of answering your question. So starting on the first area. Well, Ali, you've talked about the way that sort of DAC6 has been set up with the legislation. I mean, I was just wondering whether you could sort of enlighten us a bit on how it sort of interacts with the sort of other aspects of the banking tax agenda, such as the senior accounting officer, corporate criminal offence, and the various other aspects of the tax transparency agenda.
Thank you very much, Henry. I think the key thing is, first of all, I always find it useful to look at the context in which any legislation is being brought into force. And there are existing obligations within banks with regards to taxation. And these are governance obligations. Usually what that means is basically the responsibility of it rests with the board. And these obligations, as you mentioned, are things like, importantly, the code of practice. The code of practice, as you may know, came into force after the banking crisis, whereby the banks were specifically asked to subscribe to a code of practice that they have willingly entered into with HMRC, and there are various obligations under that banking code, code of practice, one being that you will meet all your tax obligations, and another one is around being open and transparent with HMRC. And it's quite interesting in that recent regulatory action that has been brought against banks, they usually cite that you were a signatory to the code of practice and you have not abided by your obligations. So that's very important. The other thing is now, since the Finance Act of 2016, there's generally been requirement for institutions to have their tax strategy, published tax strategy. That tax strategy is usually posted on the website of the financial institution concerned, and this needs to again be in line with that. So I think sort of like DAC6 is not an optional thing. Right at the top level of the organization, there is a requirement that is being properly implemented, and the responsibility for it rests with the board of directors.
Okay. I guess a sort of question that comes to my mind is plainly the financial institution, particularly if it's a sort of service provider, may be involved in a whole bunch of transactions and things with its customer base, some of which may have very obvious hallmarks, some which may not. Plainly, it is down to the sort of national tax authorities to receive all these reports and put the complete picture together. How much of a kind of two-way conversation do you expect national tax authorities to have with financial institutions to put together these sort of regressive tax planning cases, and how much are you expecting tax authorities to proactively come to financial institutions to ask for sort of further information? That's to Ali.
Oh, thank you, Henry. Yes, I mean, the whole point of the regime is what we are referring to as the early warning sign. So right. Increasingly, the expectation is that tax authorities will have this information, and the reason why they're asking for it, because they want to act on this information. They want to stamp out or at least take legislative action. Now, one thing is very important to realize: we're not talking about tax evasion, which is a criminal activity. So things like, as you mentioned, corporate criminal offense, those mechanisms, or the Proceeds of Crime Act, those mechanisms already exist. This is purely about aggressive tax planning. So this is on that side of the fence. This is on the gray side of the line, where you're looking at something which is legal, but it's what authorities would consider against the spirit. And it's that mechanism whereby once it comes to the knowledge of tax authorities, either way it's being constructed, the arrangement is being put forward, or the jurisdiction in which the taxpayers are based. So that's what it's going to do, both from a taxpayer perspective and also sort of like people who are aiding and abetting or are facilitating these type of arrangements.
Okay, great. This type of reporting regime, though, sits with a whole bunch of other pieces of regulation too that deal with the sort of automatic exchange of information, common reporting standard, and of course the US reporting requirements for US nationals around FATCA. I was just wondering whether Emmett might just sort of explain to us how the population of DAC6 reporting fits with the reporting that sort of financial institutions need to make now, sort of under these other forms of regulation. Emmett.
Yeah, hi, Henry. Yeah, so it's an evolutionary process. The DAC2 was the CRS. When CRS were implemented, the authorities realized there's a couple of loopholes. There's taxpayers are taking measures to avoid being reported. So then came the MDR, and from the MDR came the DAC6. And the CRS component in the DAC6 is through Hallmark D. And they ask, I mean, the requirements under the Hallmark are specific, and they are not covered by the main benefits test. What that means is that if an intermediary discovers that it's met the conditions of the Hallmark, that goes straight through reporting. The framework is the automatic exchange. It's DAC6 framework was put on the DAC2 framework, and the DAC6 framework are the same. However, the frequency of reporting is different, and the level of information that needs to be provided is not easily or is not readily available for a lot of financial institutions. So that's the sort of difference, where the CRS would look at certain fields that may exist within the core banking system or within any other sort of repository within the organization. DAC6 doesn't work that way, because there's a lot of commentary and tax regulation that needs to be incorporated in the reporting and cited, and that what makes it slightly more complicated. So that's an evolutionary process, and from the Hallmark D, then we have A, B, C, and then E. We look in corporate taxation, and then we've got generic hallmarks, which bring in a lot of different requirements. So we're looking at CT concepts, we're looking at AML KYC, we're looking at DAC2, i.e. CRS in itself, and organizational knowledge in terms of their visibility.
Okay, great. Thanks for that. So, I mean, would it be fair to say that if one was to draw a sort of Venn diagram between the sort of populations covered by all of these different regulations, Emmett, there would be some degree of overlap, but not a complete degree of overlap. Is that right?
That's right. I mean, essentially, I think though any intermediary would need to identify the tax residencies of their account holders or the counterparties, right? So that's a DAC2 concept. Onboarding documentation should be in place, and I think a lot of FIs should use that information, or intermediaries should use that information to build upon the DAC6 requirements. And there is the link, and specifically in relation to Hallmark D. So that's the easy bit to sort of, if I can put it that way, to tackle in the DAC6 with the DAC6 requirements. That's the easy bit. Now the most difficult bit is when you start looking at either side of D. You're looking at E and preceding sort of hallmarks.
Okay, great. So, I mean, these are quite sort of complicated and sort of judgmental things to sort of operate within a bank. Turning to Andrew now, I mean, how do you decide in sort of ICICI who is going to take sort of overall executive responsibility for this, Andrew?
Thank you, Henry. It's a good question. It's a very pertinent question, and what we've found is DAC6 doesn't have a natural fit or natural home. So as a UK regulated bank, we of course are governed predominantly by the PRA and have the senior management regime well embedded within the bank. Have to incorporate DAC6 into our existing governance framework and structure. And there are three options that we are currently looking at for an accountable executive for DAC6. And the three options are the CFO of the bank. The second is the head of compliance. And the third is the head of the business unit that is likely to generate the majority of DAC6 reportable hallmarks. So we're currently going through a process at the moment to actually assess the pros and cons of each of those options. So for example, if it sits with the head of compliance, then it makes ongoing assurance and auditing slightly different, because compliance really ought not to audit against the effective ongoing implementation of DAC6, because there's a conflict there. You mentioned earlier the senior accounting officer, so that they have quite specific responsibilities from a taxation and HMRC point of view. So you know, should it more naturally sit with the CFO? I think what's important in my view is always start at the top. So who is this accountable executive? And then the DAC6 framework can then filter down and flow from there. Have a good documented audit trail of the options you've considered and why you've actually gone for the option that you ultimately decide to pursue. And then that's good governance in itself. But also as well, that needs to be rubber stamped and signed off by either the board or an appropriate board committee, that they are comfortable with the DAC6 framework within the bank and whom will be accountable within the bank. I think one of the other areas to consider as well, regardless of who the accountable executive is, undoubtedly, because it will apply across more than one area of the bank, then those senior managers that hold SMF functions within the bank will need to place reliance on each other to have a coordinated and effective DAC6 framework. So even though you have one accountable executive, which is absolutely key, undoubtedly they will have to place reliance on other senior managers across the bank. And then when that governance framework has been established, you then need to think a bit about MI and reporting. So, you know, what MI is needed on an ongoing basis, you know, who will produce it, what will it include, what's the frequency of that MI to provide assurance that DAX is working as expected and as it should do in practice. And then also as well, which board committee or which committee within a firm will have oversight and challenge over DAC6 activities. So I think holistically, if you can sort of put a tick against most of those boxes, then you're well on the way to having an effective DAC6 governance framework.
Sure, that's really interesting, Andrew. I mean, how much sort of overlap is there with the other reporting frameworks that you have for tax? I mean, we sort of mentioned FATCA and sort of CRS and all that kind of stuff. The sort of automatic exchange of information. Does any of the governance structure for DAC6 need to sort of incorporate that or cover that too, Andrew?
Yeah, I think the way that we do things in the bank with regards to CRS and FATCA, they're predominantly owned by compliance, with the responsibility for the reporting. We place a lot of reliance on our operational areas to generate and drive the various reports which are needed to comply with those two pieces of legislation. But as a cross-check, we do have the involvement of the CFO too. So prior to submission, it goes through a four eyes check with the CFO too. So I think there will be some similarities with CRS and FATCA, but not a lot, because I think the DAC6 regime is very different, and we will look at what we do for other tax reporting legislation, but ultimately I think the structure that we have in place for DAC6 will be different.
All right, great. So turning then to the key challenges for the sort of overseas and challenger bank sector, I guess one of the key things is how you're sort of organised in the UK, and perhaps sort of Emmett, you can explain to us how and indeed whether there is any difference between whether you're organised as a branch or as a subsidiary company in the UK.
Yes, Henry. So, I mean, before we look at the status of a certain entity, I think the more important thing is, can there potentially be intermediary in any arrangements? I think that's where the starting point is. So a branch is and can be an intermediary, and any other status that FI would take. So I think the starting point will be the status of intermediary, either promoter or service provider. More of a service provider than a promoter. Promoter, as Ali mentioned earlier, they would be very active in terms of putting a scheme or arrangement together and standardizing it and distributing it and designing it for implementation. Now, for overseas and challenger banks, I think, and branches, Hallmark C and Hallmark E will feature quite well, not heavily, but essentially they need to look at that, because that's an arrangement with their head office. There are a lot of outsourcing arrangements that have been put in place. There's debts that have been agreed upon, some arrangements. So from a proprietary position, I would look at it from Hallmark C and E. So I think that's where the starting point is what status or what arrangements they have in place from an intermediary perspective.
Okay, so I mean, it's just really key to see what you as an organisation are doing that might be covered by DAC6, as opposed to sort of focusing on how you're sort of organised in the UK or indeed globally. I guess one of the sort of other challenges that I can see is the way that sort of Ali mentioned that some countries have deferred within Europe the sort of implementation of DAC6, and plainly global groups need to take this into sort of account when they are reporting cross-border arrangements. Perhaps Andrew, you can just explain to us how you've dealt with that in your bank, in sort of ICICI. Well, Andrew, yeah, good.
Yeah, thank you, Henry. Yeah, I think some of the key challenges for us is training of the relevant first line staff that are going to be involved in identifying these potential DAC6 hallmarks. So I think our view is that needs to sit within the first line. So they are the early warning system, and if they identify a particular arrangement that they think would trigger one of the DAC6 hallmarks, then there's an onus on them to then raise that, and raise that in a way which also provides a summary and collates together the relevant information. And that then needs a second pair of eyes, I think. So probably someone in the second line to then look at that, to make that assessment as to whether it's a reportable hallmark or not. And if it's not reportable, having that audit trail to determine that it's not reportable, and this is our rationale and our reason for not reporting it.
Sorry, could I just ask you perhaps too? I mean, all of this sounds like a great process and sort of all that, but I was just wondering whether you could share with us a sort of practical example of what a cross-border arrangement might be. What kind of thing it might be?
Yeah. So I think the areas within the bank. So we're a service provider, and we're not promoters. We don't provide tax advice. So the overall impact of DAC6 on the bank, we're expecting to be not to be significant or not to be material. The areas that we're homing in on for potential reportable arrangements are a corporate loan, so a loan to a multinational corporate, and that loan may well be on a bilateral basis or a syndicated basis, and that loan involves a structure which crosses more than one EU state, EU country, and the similar would be smaller loans. So these what we would call loans against property, which is corporate real estate loans. Again, where the structure of the arrangement is international in nature and would trigger one of the hallmarks. So that's where we see the impact being on ICICI Bank.
Okay, fine. No, that's really helpful. I mean, you do have a German branch there, and I thought that these sort of implementation deadlines were somewhat different in Germany. I mean, how does sort of ICICI deal with that as a bank? Because if there aren't the same sort of implementation dates across the European Union, then you presumably need to take that into account in your sort of implementation program and reporting program.
Yeah, absolutely. So we have started off with a DAC6 project for the bank, involving key stakeholders, key individuals from all the respective areas of the bank, whether it be finance, the operations area, legal compliance, and some of the key business areas. And that does include the German branch. Since the recent changes and deferral of reporting adopted by certain member states, including the UK, we have amended our project plan to flex that, to take into account those deferrals where possible. But as you quite rightly state, the German tax authorities, they have decided not to take up the option of a deferral, and they're sticking to the original DAC6 reporting deadlines. So what we've effectively had to do is front load our DAC6 project and push everything related to the Germany branch to the top of that project plan, to make sure that we're not missing any of those German branch reporting deadlines. So we've had to skew our effort to making sure that we're dealing with those deadlines first.
Okay, and I mean, Ali, is there sort of any particular reason you're aware of as to why Germany didn't defer? Because I think most countries have.
Yeah, I mean, most of Europe has deferred the reporting deadlines. So, as I said, the regime still goes live on the 1st of July. It came as a surprise. I mean, first of all, for the European Union to get together and actually agree on a directive to actually defer in the first place was a surprise. That required quite a lot of action and coordination beforehand. But then for the largest economy in the EU not to take up the option to defer the reporting deadlines has what some have described as undermining the whole deferral arrangement, because what happens is, as Andrew was indicating, is if you've got an excess into Germany, Germany is essentially, by sticking to the old deadlines, which means that basically in 4 weeks' time, the first DAC6 report will be filed in Germany. You're effectively sort of like forcing any other party in that arrangement to also give up information to the German intermediary, who is under a legal duty to submit reports. Now, I think a lot of it was around German posturing. They wanted to be, there's been a bit of a fraud, as you probably know, around Wirecard, which didn't reflect too well on German institutions, regulators. So Germany was very keen to show that they're being hard on business, and one way of demonstrating that was to basically say, we're not going to take up the deferral.
Okay.
Now, the other thing they've done is the tax authority, on the other hand, has said, look, if you get your back book review, the prior year, the retrospective review wrong, it doesn't matter. We're not going to penalize you. So I think industry is really under a lot of confusing sort of like mixed messages they're getting from the Germans. But most people, most enlightened financial firms do intend to meet with those deadlines, the ones arising in 4 weeks' time.
Yes, quite. I mean, it makes sense to get it right first time. I guess, but I guess the sort of one of the reasons for the deferral, if not the strongest reason for the deferral, was the pandemic and lockdown, and how does one complete projects under these kind of conditions now. So, to Emmett, you have been doing a number of DAC6 projects over the last few months. How have you been dealing with this project under socially distanced working conditions?
Yeah, it's been quite challenging, but it's working. It's not actually caused any problems. I think, to the contrary, it helps us all focus on the key tasks. And when we get into these meetings and we look at the documentation and have those interviews, it's the conversation is very focused. So we know we have an hour. It's all on these collaborative platforms, conference calls and stuff, and we get to understand the business. We look at the documentation. There's a lot of repositories available to exchange documentation that are secure. So as a consultant, I from my perspective, it's not been too much of a problem. However, from a client side who likes the personal interaction, to see people face to face, it's been challenging for them. Now, I have been, in terms of the reporting, as we just discussed, it's been deferred, and HMRC is still building the schema. So actually, they haven't, and I think that's been one of the reasons for deferral as well, is because they're not ready themselves. Just to add my two pence to the conversation.
Mm-hmm. Sure. Yeah, but I mean, the main message, it sort of seems to me, is that there's no reason for sort of financial institutions to delay their sort of projects here. It can be done quite well.
Yes, that's true. That's right. And if we look at this regulations been around, and everybody, the industry is aware of, the intermediaries are aware that it went live, or the back book started from the 25th of June 2018. Although during that process, a lot of confusion, not understanding of of the exact requirements, because the scope was very broad, and it captured a lot of arrangements with anybody would assume that HMRC number or the tax authorities will know about. They're standard. So that sort of delayed the whole compliance program. Guidance was issued quite late by HMRC, if I can put it that way. So there was a lot of pause with the compliance programs, and now the guidance is there, and it's been updated, the final guidance. So it has presented quite a few challenges. So you take a chunk at a time, and then you have to revisit the work that you've already done, to review the latest guidance against the assessment that had been undertaken. So it's quite challenging, and it's back and forth actually, to a certain degree. But now all the FIs have been given, or intermediaries are given 6 months to sort of catch up and report. And I think they should use this time wisely, because now there's clarity to a certain degree. It's evolving compliance program, evolving regulation. There'll be more clarity as we go along, not only from the tax authorities' perspective, but also from the intermediary perspective. Still till date, there are a lot of questions that are left unanswered. So I think the tax authorities, when they receive and put the jigsaw together, they will make it more clear. There's no point receiving information that the tax authority already have. It's just duplication information. It just overburdens the system. So I think a natural balance will be achieved between what is actually required, what is relevant, and how proportionately a intermediary should put in reasonable procedures. It's all about reasonable procedures, the governance, the different gateways or routes to onboarding. So these are challenges that intermediary needs to address, really.
Sure. And I mean, just sort of thinking about the reporting side. I mean, plainly a way that perhaps some financial institutions might want to reduce their risk here is to report quite a few things, have a very wide remit of reporting, as sort of Ali's said sort of earlier on. There's nothing wrong with reporting things. I mean, I'm just sort of testing that a bit to see whether that's true, because I'm just sort of wondering about how reporting perhaps sort of interacts with GDPR, say, or various other forms of privacy and sort of confidentiality type of legislation, and whether financial institutions really need to focus on getting it right and reasonable, as you say, Ben Emmett.
That's right. I mean, where personal data is concerned, where a taxpayer or the arrangement where the reporting takes place, where there's identifiable individual and natural person, intermediary needs to be very careful and ensure that they actually have sufficient information, the information is accurate and it's up to date. So all these concepts of GDPR would come into play. Where there's no personal data being exchanged, it's a corporate or non-financial entity, whatever it may be, then obviously there are different rules around reporting that information. So best practice under GDPR, record the process, reporting procedure, the rationale for it, what safeguards exist, how this is going to be implemented, and how bifurcated between personal individuals and corporate. So I think chat with the DPO would help any FI
Sure.
address the challenges around the GDPR.
Okay, great. Now, I mean, I think though that from what you're saying, it seems to be quite a sort of judgmental process. I mean, just sort of looking around the marketplace, though, I mean, you see quite a lot of companies offering software to help with the reporting and the management of sort of DAC6. Well, Andrew, how are you looking at sort of automating the process to improve quality and promote efficiency in the DAC6 implementation process?
Yeah, so we're looking at a number of tax software, tax compliance reporting solutions, because I think it's important to have that consistency of reporting and an audit trail of potentially reportable DAC6 hallmarks, a system that can generate MI as well, and also give you a better handle on what reportable hallmarks you have, where they are in the process, etc. So I think there's two challenges here. There's a number of external third-party systems in the marketplace. So there's a time challenge, and also a filter challenge. So you know, who do you speak to and why do you speak to them? And you have to devote time to doing that. But then I think there's also an internal challenge as well, because if you're going to engage with a third-party provider, then there's probably a number of internal steps that you need to go through that will take time. So, for example, you will need to engage with your legal department because there's going to be contracts in place. There's probably going to be some IT security type challenges, particularly if the external provider stores data on the cloud, for example. So there's a fairly robust process there to do your due diligence on the external provider. And then there's potentially a tender process as well. So you may have to present 3 providers to the various committees within the bank that would approve and take that decision. So I think when you're looking at the benefits and the pros and cons of tax compliance software, I'd split them into external challenges and, you know, who do you identify, how do you do all that, and then internal challenges regarding the level of due diligence you need to undertake and the various steps you have to take internally to actually onboard a third-party provider.
Sure, and I mean, like you've said, for sort of ICICI, you think that the sort of impact on the kind of business that you have will be fairly minimal. So, therefore, perhaps the sort of cost-benefit case for you to spend a lot of money and go through quite a process to get software on board might be sort of harder to make for you than for an organisation that has quite a lot of exposure.
Yeah, absolutely. So it's, as you say, it's a cost-benefit analysis. So what's the benefit we will get against the time, effort, and cost, and ongoing cost of this sort of solution. So that needs to be pulled together with a short business case. And if that stacks up, you'll probably go down that route. But if it doesn't, then you might have to look at an alternative, more manual-driven solution.
Sure. To just conclude the sort of panel session here, I think I'd be very interested in your views on how you think the sort of how successful you think the legislation will be. I mean, well, sort of Ali mentioned the DOTAS legislation in the UK that has perhaps led to some de-risking by financial institutions in the tax planning space. Perhaps starting with Ali, what do you think that the net effect will be of DAC6 on the financial services sector?
Well, as I said, I think it's probably one of the most profound, deepest change that we have seen. It changes fundamentally the relationship between the taxpayer, the intermediary, and the tax authorities. There has been a tug of war between taxpayers and financial and the tax authorities as to whose interests are intermediaries acting upon and who do they have primary responsibility towards. And certainly the tax authorities think that financial institutions are working for them.
Okay. I don't know, Andrew, whether you have any views as to how this might affect your business policies going forward as far as sort of ICICI is concerned?
Yeah, it's an interesting question. As you know, we're not tax advisors and we're not promoters, so we don't expect the overall impact on the bank to be significant. So, you know, I echo Ali's comments with regards the reach of DAC6 across the whole industry, but I suspect that other sectors or other firms in the industry will be impacted by DAC6 a lot more than we will.
Okay, and final word to Emmett then. I mean, you see quite a few clients, Emmett. Do you see them starting to de-risk here, or do you see there not being a great effect right now?
I think at the moment what I'm seeing is knowledge building, more importantly. A lot of intermediaries are not aware of tax concepts or impact on tax, and not tax advisors. They don't look at that space. It's purely AML or the KYC areas. Now there's a lot of learning process happening, so capacity building in relation to that, and demarcating the boundary between actually what tax advice is and what compliance in relation to tax looks like. And I think the identification of risks will happen in the next couple of years as to what constitute risks to an FI themselves, and where they look at de-risking, if you know what I mean. So first is identify what the risks are, what the business model looks like, where do they sit between tax advice and compliance with tax matters, and then in that space they will identify who the risk where the cross-border risks resides, and that's where the de-risking is going to take place, if that's what you want to call it. But at this current time, I'm not calling it as a risk. I'm calling it as an obligation. It's providing information to the tax authorities over certain tax arrangements. Now, it's the taxpayer who will then adjust. Behavioral adjustment happen at that point in time, along with an awareness from from intermediary perspective. And that awareness, when they build sufficient knowledge, that's when the behavior will change, and that will take a bit of time actually, because right now I'm just seeing a learning process more than anything else. So even if they wanted to de-risk, they don't know where they're going to de-risk at this point in time. I mean, you cannot de-risk your whole loan book and just not look at if you look at Hallmark C or otherwise, if you look at E, where there's internal arrangements, there's no de-risking taking place there. So if a threshold has been triggered, I've seen some FIs say, well, that's what it is, and we'll accept this. So that area is developing awareness, and obviously the position they will take and justify. And as Andrew said, it's not what you report, it's what you don't report. You need to justify it, keep a case log, and that's the learning process is going to sort of take place in the next couple of years, because actually a lot of FIs, a lot of intermediaries are very early stages, even accountants and lawyers alike.
Sure. Okay. So it's certainly a developing area, and one which we all need great advice to be able to sort of engage with properly. I'd like to take the last couple of minutes here to just sincerely thank the panel for their great insights on what is a very, very technical and complex and topical and indeed new sort of area for many financial services institutions. As you know, season 1 of Hansuke Conversations webinar series is now coming to an end. I'd like to say that we've had over 700 people participate through the series, and we've also had 38 speakers too. So it's been very well received, and I would also like to thank you for all your support and sort of engagement from the participants, and indeed especially from the to the speakers too during each session since March. We'll certainly miss our Friday gatherings, but we will be back in September for season 2. So do look out for your sort of invitations in your mailbox later on next month. And with that, it's sort of goodbye from me for the next few weeks, and I'll leave the last couple of words to Ali to conclude the webinar and indeed the webinar series. It's over to you.
Thank you very much, Henry, and a big thank you to you for moderating. It's been a long webinar series, and we look forward to coming back. the only final points I would sort of like say is it's been a really good discussion. I really enjoyed it. I think one of the things about DAC6 is it's got the client side, but it's also firms themselves. They have to look at their own arrangements, whether it's intercompany, charges or whatever. So the whole TP area. So it's really quite an active, alive area. And if you haven't got enough of your fill, we are actually have got another webinar in 2 hours' time, which is focused very much on the hedge fund community and the private equity community. So do join us. And of course, it's a goodbye to this series, but do remain in touch. If you have any questions about anything that we have covered during our series, please, we look forward to hearing from you. And with that, I sign off and I wish you the very best for your summer and stay safe. Thank you. Goodbye.